All right, but BlackRock's forecast, what do they say is going to happen in 2023? We want to know because we want to front run it or invest along with them so we can get rich like Jay Powell, right? So they say that there's a new regime coming. Now, I say this all the time. The world we're going into is not the same as the world we're leaving behind. So what is this new regime? The 4-decade period, the last 40 years, of largely stable activity and inflation is now behind us. So whatever's happened the last 40 or 50 years, that was a once-in-a-lifetime period. That's over.
In this telling interview, Mark Moss reveals BlackRock's shocking prediction for the future economy. BlackRock is the world's largest asset manager and holds over $10 trillion worth of assets. As a result, you're going to want to pay close attention to their predictions. BlackRock believes that we are headed to a new volatile economy like we have never seen before, with old investment strategies no longer working. Make sure you stay until the end because Moss suggests how to front run BlackRock's predictions and how it could be a great opportunity if you know what is coming. Moss suggests the passive investing strategies of the 60-40 portfolio or investing in a mutual fund aren't going to work anymore. To make money in this new economy, Moss believes the more active trading and a more informed investor are required to tactfully manage your portfolio. Now, let's hear what Mark Moss has to say.
The new regime of greater economic and market volatility is now playing out. So what do we expect in the future, next year and beyond? Lots more volatility, lots of prices going up and down, a lot more shortages of products, market volatility, all of that. And it says here that central banks are deliberately causing recessions. This is BlackRock. BlackRock says this. Central banks are deliberately causing recessions. And of course, Jay Powell tells us this all the time, that his goal is to crush demand or make you feel broke. It says here a key feature of this new regime, the one that we're going into, remember, whatever your financial advisor tells you, just invest for the long term, stay in the market, 60-40 bond split. That's all old. That was for the old regime. There's a new regime. You have to get on board with this. We are in a world shaped by production constraints. So the world is going to have a lot more production constraints moving forward, a lot more supply chain restrictions. We're going to have a lot more onshoring, nearshoring. All of this has to get rebuilt. That's why inflation is so high. And that's why I talk about all the time. I believe that this might be some of the lowest inflation we'll see for the rest of the decade. Now, nothing goes up or down in a straight line. So inflation goes up, comes down a little bit, up, and down. All right, so that's part of the new regime. Now, what else? They also said that you have to understand that there's a brutal trade-off coming. So central bank policy rates are not the tool to resolve production constraints. So the reason why prices went up on food and on oil was not because there was too much demand. There weren't too many buyers of it. It's that the production constraints, we had a drop in supply. Now the central banks, their policy rates are not the tool to fix that. If we have a shortage of supply, the goal would be to get more supply, but they can't get more supply, so they're trying to crush demand. But as BlackRock said, that's not the tool. So they're going to have to either trade off one or the other. They're either going to get inflation back to 2% targets by either crushing demand, so that means crushing your retirement account, crushing the value of your home by crushing demand, or they're going to have to live with more inflation. And that's my bet. I believe the Fed is going to just live with more inflation. They're going to have to. That's the world that we're going into. All right, so we're going to have more inflation. We know the world's going to change. Part of the reason why, three main factors are this. I've been talking about this in many videos. We see three long-term trends keeping production capacity constrained. One, aging populations. This is one of the greatest problems that we're facing moving forward, is that the populations in the developed world, China's the worst. Most of Europe is really bad. The US is looking a little bit better, but most of the developed world has aging populations that are going to time out. We don't have enough young people coming up, and so what we're really facing is population decline. That means continued worker shortages in many major economies, which leads to supply constraints. We're also, number two, persistent geopolitical tensions. What's happening with Russia and Ukraine, what's happening in China, Taiwan, what's happening with Israel, Iran, this is not, again, just something new that's going to be resolved and we're going to go back to normal. No, we're going to continue to have geopolitical tensions. We're breaking from a centralized world into a decentralized world, into a multipolar world. That's going to continue. It's going to rewire globalization and supply chains, pushing inflation back up. Number three, the transition of net zero carbon emissions. They're going to continue to try to shut down our cheap and readily available fossil fuel supply and move us to inconsistent, unreliable, and very expensive green energies. So they're going to continue to do this transition, which is going to cause energy supply and demand mismatches. Energy supply and demand mismatches. When there's supply-demand mismatches, what happens? Oh yeah, prices go back up. When the price of energy goes up, everything goes up. If I'm a factory manufacturing widgets, but my energy prices go up, my widget price goes up as well. So what worked in the past isn't gonna work anymore. The world we're going into is not the one we're leaving behind. That's what I keep saying. All right, so what do we do about this? Mark, you're giving me the problem. The world's gonna change. All right, we're going to a new regime. What am I gonna do? How do I front run this? Well, there's a couple things. First of all, there's a new playbook. And so we need new tools. I believe there's a new world being built, and there's this giant opportunity in the parallel economy. So the way that we invest is gonna be different. Also, the business opportunities are gonna be different. I'm gonna hold a 3-day event where I'm gonna have a bunch of speakers and panelists and experts and explain what this new parallel economy is, how you can take advantage of it, how you can invest in it, how you can convert your business or start a new business. I think it's the biggest opportunity that we have. And it's how we push back on this. So this is how BlackRock is starting to crumble right now, because parallel structures are being built like Strive Asset Management. So there's a link down below if you want to check it out. 3 days, we're gonna go through all this. I'm gonna tell you all about this opportunity and how to invest in it. So if you really wanna know. However, what are we gonna do with our investments? Well, there's a new playbook, and this is again from BlackRock. So the one thing that we have to know is that there's gonna be more frequent changes. This is per BlackRock. So the days of, again, time in the market, just put it in there, wait for 50 years, buy your index fund, 60-40 bond split, that's over. Right? That's over. That's the old regime. The new regime is there's going to be more frequent changes. There's going to be massive volatility. And so we need to be able to in and out. We need to go long. We need to go short. We need to be able to ride the waves of volatility. We also have to have new investment strategies. So those new investment strategies are, again, not just thrown in a 60-40 portfolio or a mutual fund and just sitting back for 40 years. Now we need to have more granular views. So right now, energy is doing really good, or maybe commodities will do really good. Tech is down, right? And so instead of being so broadly focused, we're gonna have to look very granular at things. Even with real estate, it's not gonna be real estate in the United States, it's gonna be, what about Tampa, Florida versus San Francisco, California? San Francisco is the worst real estate in the nation right now. Tampa, Florida is one of the best. And so we're gonna have to look at it much more granularly. We're gonna have to look at sectors. So energy, specifically uranium, for example, specifically in enrichment, whatever. And we have to look at regions, Tampa, Florida versus San Francisco. We also need to look at sub-asset classes. So again, energy, but not just energy, how about uranium, right? And not just uranium, but how about this new company that's building these uranium reactors, for example. So sub-asset classes, not broad exposure. Now they give us a couple playbooks that we can take a look at. So it says right here, we are here. So right now, they say that there is not enough damage in the price. So what's going to happen? So remember, they said that the central banks are trying to crash the markets. They're saying that it is not priced in yet. So that means they believe there's going to be more drawdowns in the markets. So risk-off damage is not priced in, is what they're saying right here. And so in the equities market, that's stocks, they're short. In the credit markets, they believe that they're a little bit positive on that. Now we can look at a little bit more granular view if you want to look at stocks and equities. Now we can see, for the most part, they're short all of that. In developed markets, they're short, they're underweight. The United States, they're short or underweight. In Europe, they're underweight. In the UK, they're underweight. In Japan, China, emerging markets, and Asia, they're neutral. So they're a little bit neutral. They're not really bullish or positive on any of the equities, neutral on a few countries, and underweight on most of the developed countries. That was developed markets, United States, Europe, and the UK. So that's the plan. You need to be tactically managing your portfolio.
Click here to watch Mark Moss break down exactly why new crypto regulations will prevent another bull run from ever happening again. It's a must watch if you're a crypto investor.